September is one of the most feared months in the United States stock market. Known as the September effect, the period brings volatility that can surprise even the most experienced investors. History shows that after the summer, many investors return from their vacations, revalue their portfolios, and conduct mass sales, which can lead to significant declines in stock prices. This seasonal behavior creates an environment of uncertainty, making markets more sensitive to any negative news. For those who follow the market, September is not just another month. It requires extra attention and well-thought-out defensive strategies. This year, the scenario seems even more tense with the possible action of the Federal Reserve. The Fed is expected to cut interest rates, but the size of that cut is directly related to the economic data that will be released, such as the employment report. If the numbers are worse than expected, we could see a more aggressive cut, which will bring a new wave of volatility. Enjoyed this content? Then don't miss out on the other videos on my channel. I'm sure you'll find something that catches your interest. And if you haven't subscribed yet, make sure to hit that subscribe button and turn on notifications. That way, you'll stay updated with all the new content and help the channel grow even more. I'm counting on you. While rate cuts usually help stimulate the economy, the uncertainty hanging over the Fed's decision has markets on alert. Every move in monetary policy is crucial and can set off chain reactions. In addition, the impact of interest rate cuts could be twofold. On the one hand, many companies that accumulate large cash reserves benefited from high interest rates, taking advantage of the yield on their investments. With the fall in rates, these companies may see a significant reduction in their profits, which is already worrying market analysts. This adds an extra layer of pressure to the market, as while some sectors may benefit, others may face difficulties. The uncertainty is great, and investors need to be prepared for a turnaround. The environment of uncertainty is also aggravated by the proximity of the American elections, which always bring volatility to the markets. With the possibility of changes in economic policies, many investors adopt a more cautious stance. This scenario of caution is reflected in the fall of more economically sensitive sectors, such as energy, which already showed a negative performance in August. The combination of political and economic factors turns September into a real minefield, where any false move can result in significant losses. Finally, the American stock market in September is a real trial by fire for investors. Volatility is inevitable, but it also opens up opportunities for those who are prepared. Defensive sectors, such as healthcare and utilities, have been recommended by experts as good alternatives during this period of uncertainty. However, those looking for quick profits should be aware of the pitfalls, as the scenario can change drastically from one day to the next. September requires strategy, analysis, and above all, cold blood to navigate the turbulence that the market may present.